This letter right here is one of the most expensive pieces of paper any homeowner in Canada will ever receive. And most Canadians just sign it without even understanding fully what it's about to cost them. In this example, a mortgage balance of $400,000 renewing today can jump to by around $470 a month. That's $5,600 over the year. That's $28,000 over the next 5 years. Same house, same mortgage, same borrower. The only thing that changed was the interest rate. And today I'm going to show you exactly how that happens, how to calculate it properly using real Canadian mortgage math, and what you should do before you sign anything. And by the end of this video, I'll show you how to use our mortgage renewal scorecard to figure out whether you're actually ready for your next renewal. Stick around. Hey, it's Rob Campbell, Ontario mortgage broker, and this channel is about one thing, giving you the discussions, the math, and the strategy that banks usually do not explain clearly. If your mortgage is coming up for renewal in the next 6 months, 12 months, or even 2 years, this video is for you. And if you want a fast way to see where you stand right now, check out the renewal scorecard and the link that we're going to give you at the end of this video. It's designed to help you figure out if you're in a strong position, if there are a few things you need to clean up, or if you should be taking action now before renewal actually hits. Let's get started into it. What the last 5 years actually looked like? Well, let's keep it really simple with this example. We're going to assume that your mortgage balance today is about $400,000. That mortgage started 5 years ago on a 25-year amortization on an interest rate of 1.89%. Now, proper mortgage calculations means that the original mortgage should have been around $478,000 to $479,000. Your monthly payment for the last 5 years would have been about $2,000 a month. So over the 5 years, you've paid a total of about $120,000. Out of that, $78,000 went towards principal and about $41,000 went towards interest. That leaves you today with the remaining balance of the $400,000. Now, here's something that's important. A lot of people think almost all of their early payments go to interest. That's not actually true in this example. On the very first payment, about $750 went to interest, but about $1,250 went to principal. So yes, you are paying interest early on, but in the case of lower rates 5 years ago, you were still paying down real principal every month. So now the problem starts when the remaining balance renews at a much higher rate. The renewal payment. So let's look at what happens next. You now have a $400,000 mortgage. Your original 25-year amortization has already got 5 years off of it. So that means you've got 20 years remaining. Now let's assume your renewal rate today is about 4.25%. Using proper Canadian mortgage math with semi-annual compounding on the interest, your new monthly payment becomes about $2,500 a month. Your old payment was about $2,000. Your new payment's about $2,469. That's an increase of $469 a month. That's $5,600 a year. And over the next 5-year term, if you take a 5-year, that's $28,000 in extra payments. Same mortgage, same balance, same borrower. The only thing that changed was the rate. And this is where a lot of people get caught off guard because they look at the renewal letter, they see the new payment, and they think they have no choice. But that first offer from your bank or your current lender is usually not their best offer. And if you're not sure whether the numbers are strong, whether your credit is where it should be, or whether now is the time to negotiate or switch, run yourself through our Mortgage Renewal Scorecard app. It's a quick way to see how prepared you really are before you speak to the bank. Now, here's the part that most people miss. Here's the key point. Your renewal is not just paperwork. It is a negotiation, and most people never treat it that way. They get the letter, they just sign the letter, and they lock themselves into a payment that may be higher than necessary. Even a slightly better rate can save you real money. Because on the $400,000 balance, small differences matter. A quarter point matters. A half a point matters. Over 5 years, that can mean thousands of dollars. So before you sign anything, you need to know your numbers first. Not guess, not estimate, actually running the numbers. And that's exactly why the Renewal Scorecard app that we've created can help you get a really quick snapshot of whether you're ready or whether there's some weak spots and whether you should be taking action now instead of later. So here's your 3 moves at renewal. You really need these 3 moves. First, negotiate with your current lender. Call them, email them. Don't just click accept. Don't just sign the form. Call them and say, hey, I've received your letter. I want to talk about our offer and see if you can do any better on the rate. I want to make sure I'm getting your best rate available. That one sentence alone can save you thousands. Because lenders know most borrowers will not push back. Move number 2 is Get a competing quote. Talk to a mortgage broker. Get another option. Get another quote. Then bring that quote back to your current lender, okay? That gives you leverage. That leverage matters, especially when your balance is still very large. And move number 3 is look at your amortization. You may be able to extend your amortization to lower your payments, and that can help with cash flow. But it also means paying more interest over the time frame. So if you do that, just please understand that there's a bit of a trade-off. Lower payment now usually means higher total cost later. Here's why this matters. This is what I want you to take from this. If your current mortgage balance is $400,000 in this example at 1.89 and you're going into a 4.25 rate, your payment doesn't just go up a little bit, it goes up a lot. It goes up $470. That's real money. That affects your budget. That affects your savings, your breathing room, and your options. And that is why renewal should never be treated like some automatic administrative task. It is a financial decision. And if you do not run the numbers, you're negotiating blind. So before you do anything, before you sign your renewal, before you accept the bank's first offer, go ahead and try the Renewal Scorecard in the link in the description. See where you stand. See what needs work. See whether you're actually ready for what's coming. Okay, so the bank sent you that letter. Don't just blindly sign it. Run your numbers first. Look at your balance. Look at your remaining amortization. Plug in the renewal rates. See what the new payment really is. Then compare offers. Then make your decision. And before you go to the bank, just take 2 minutes to run yourself through our renewal scorecard. And it might actually help you figure out if you're in a strong position, if you need a bit of a strategy, or if you can make changes now to avoid mistakes at renewal. Because you made the payments, you built the equity, you deserve to know the math before you commit to the next 3 to 5 years. Hey, if this video was helpful, do me a favor, hit the like button so more Canadians like you can see this before they just go and blindly sign the renewal. And if you want more videos on Canadian mortgage math or renewal strategies or cash flow or how to make smarter borrowing decisions, go ahead and subscribe to the channel. And if your mortgage is coming up for renewal, go ahead and try our renewal scorecard. I'll put the link in the description. Whether you're renewal ready now or later, it might benefit you. So don't wait until the bank sends you that letter and you're under pressure. Do your investigative work now before it's too late. Go ahead and get your score and get into your renewal knowing exactly where you stand. And I'll see you in the next video. Bye-bye.